the dollar really got clobbered again today, as I said it would yesterday, a delayed reaction to the QE2 announcement. The dollar index is now trading with a 75 handle. That's a new low for the move. New Zealand dollar, I mentioned it last night. It ended up being up better than 2% on the day. The New Zealand dollar is now at 80 cents. You know, I remember buying New Zealand dollars under 50 cents not too long ago. So they've almost doubled, since that time, or 60, 70% gain. The Australian dollar hit a new record high today. It's almost 102. It takes $1.02 to buy an Australian dollar. The Swedish krona hit a new 52-week high today. I don't think it's a record high, but it's not. But it's definitely a 52-week high. The euro, not a 52-week high, but it's close. It's at over $1.42 now. It wasn't too long ago, maybe a few months ago, that the euro was down at $1.20. Why am I not able to pull these quotes up? Gold, I think gold was up about $40 today, an ounce. Silver was up over $1. So this is a record high for gold. It was a record 30-year high for the price of silver. I mean, silver's now going to, pretty soon it's going to be $30 an ounce, I think. I mean, this is a huge move. The CRB index hit a new 52-week high today. Oil prices were up about $2 a barrel. $2 a barrel just today alone. I think now we're about $87 a barrel for crude oil. Now, I guess, is all this making Ben Bernanke happy? I mean, is he glad? Is he like, good job. I'm really accomplishing my goals here because prices are really starting to rise. I mean, people are really going to have to pay through the nose this winter to heat their homes. This is great. It's really going to get expensive to drive to all those unemployment lines to pick up your checks. You know, that's great. I mean, how does Ben Bernanke think that unleashing a tidal wave of inflation, somehow that's going to help out the unemployed? I mean, how is it? Does he think an employer is going to say, inflation is really heating up, I guess I'll go hire somebody? I mean, what is the methodology for this? I'd love to be able to ask him, how's it going to work? How is higher inflation going to translate into a stronger economy and more jobs? You know, and this is just what happened to prices today. What's going to happen tomorrow? What's going to happen next week? This stuff is just going to compound. And, you know, I mentioned yesterday those asinine comments about how if we don't raise the national debt, that the Treasury is going to have to default. This was, Lawrence O'Donnell said that the world economy depends on America going into debt, and if we stop going into debt, it's going to be a global depression. Well, I heard more talk today on the television about how it's so critical that we raise the debt ceiling, because if we don't raise the debt ceiling, then we're going to have to default on our bonds. Can you imagine if some of our creditors are actually watching these shows? How do you think that makes them feel? The U.S., we're basically sitting senators are saying on national television, if we can't go deeper into debt, we're just not going to pay back any of the money we already borrowed. I mean, that's an official admission that the government is running a Ponzi scheme. How do you think that makes the Japanese feel, or the Chinese, or the Germans, or the Saudis? Hey, let me get this straight, America. So you owe us trillions and trillions of dollars. But if you can't get us to lend you more money because you don't raise the debt ceiling, then you're just not going to pay us back any of the money we already loaned you? I mean, sign me up for that deal. Yeah, where can I line up and buy those U.S. Treasuries? I mean, come on. I mean, the cat is getting out of the bag. I mean, that's what I said yesterday. That is the real reason more for food and more for gas isn't going to make their lives easier. And it's certainly not going to make the lives easier for people who still manage to have jobs, because their paychecks are not going to go as far. You know, it's going to feel like they're unemployed, because whatever they earn, it's going to go to food and energy. They're not going to have anything left. Ben Bernanke knows what he's doing. He is simply the patsy of the Treasury. He is, cranking up the pretty presses. As a matter of fact, if you look at the size of the $600 billion in quantitative easing over the next 7 months, that's about exactly how much the government's going to borrow over the next 7 months. Ain't that a coinkydink, right? The Fed's going to monetize exactly what the government needs to borrow. Oh, okay. Why is that happening? Right? Because the government, the Fed knows that the Treasury is in trouble, that they can't buy their debt, they can't sell their debt, and so now the Fed is going to buy it. And this is the end game. When you get to monetization, you get to Zimbabwe's monetary policy. This is what you do when you've tried everything else and you got nothing left. Right? This is I wrote an article about it on my website about a month ago. I called it the Fed's version of a Hail Mary. Right? They're throwing up this Hail Mary pass in quantitative easing. But I said it's impossible to work because we don't have any players in the end zone. We don't even have any players in the field. There's none of it's going to go nowhere. It is impossible for this Hail Mary to work because printing money doesn't work. It's not going to create economic growth. It's just going to delay the day of reckoning. But in the meantime, it's getting worse. So everybody who's listening to this radio show, if you have U.S. dollars, if you got money in the bank, if you got a CD, if you got treasuries, you got muni bonds, you've got some insurance policy with some cash value in it, you've got a fixed annuity that's going to pay you some money, you just got a lot poorer today. And you're going to get a lot poorer tomorrow. And you're going to get a lot poorer just about every day until you wake up and decide enough is enough. You know, when you've got all these newly elected congressmen now talking about tax cuts, now Bush is saying, oh, maybe we're going to extend the tax cuts to the rich as well as the poor, right? It's all nonsense. There are no tax cuts. Quantitative easing is a gigantic tax hike that dwarfs what you're paying in income taxes because income taxes just taxes the money you earn. Quantitative easing taxes all the money you have. It taxes your net worth, not just your income on your net worth. Now, the way to avoid that tax is not to own dollars. You see, it's a tax on people who are still dumb enough to have their wealth in U.S. dollars, which is why I'm so adamant when I tell people that they need to get rid of their U.S. dollars while they can. Because every day you wait to get rid of your dollars, the dollar buys fewer things. You buy fewer euros. You buy fewer Swiss francs. You buy fewer Australian dollars. You buy fewer ounces of gold. You buy fewer barrels of oil. You got to buy stuff. And I've said even for the people that, don't have a lot of money, they can't maybe buy some precious metals or can't open up an account with Euro Pacific Capital and get their money into foreign stocks, invest around the world. You got to buy stuff. I said buy the things that you're going to need. And, it's going to be a great investment because you get to use that stuff. Let's say you go and you buy a tube of toothpaste now instead of waiting a year to buy it. Let's say that tube of toothpaste is 20% more expensive a year from now than it is today. Well, what's the return on buying it now? Hey, it's 20%. Beats the hell out of the bank. It's probably better than you're going to get in a lot of stocks. And the beauty of it is there's no capital gains tax. You see, when you use that toothpaste, you use it. The government doesn't tax you and say, hey, you bought that toothpaste when it was only, when it was $1 a tube and now it's $1.20, so you got to pay income taxes on it. No. So if you buy things now, if you buy food, if you buy toiletries, and then you use them, right? If you buy a pack of cigarettes and you smoke them a year from now, right? If they've gone up in price, you don't pay taxes. So that's what people have to do. They have to get out of the dollar. Either you buy financial assets in other countries, you buy precious metals, or you buy stuff. But you can't hold U.S. currency. Now, the problem for a lot of people is their wages. People are working, they're earning dollars. These wages are going down in value practically every day. Now, of course, there is a lag, right? There is a lag between commodity prices going up and finished good prices going up. It could be a few months, it could be 6 months, but it's going to happen. That the Fed can sit here and look at commodity prices going through the roof, rising every day. Look at the dollar dropping through the floor, and they haven't even done the quantitative easing yet. All they did is say they were going to do it. So imagine where the dollar is going to be when they actually start running off the printing presses like it's going out of style. That the Fed can look at all this data and say with a straight face, we're worried about deflation. We need to make inflation higher. I mean, if they weren't worried about it before they announced quantitative easing, they sure as hell ought to be worried about it now. I mean, what are these guys looking at? I mean, who is, I used to joke and say that Alan Greenspan, you used to remind me of Mr. Magoo because he always said that he couldn't see inflation. And I thought he kind of looked like him. I don't know, Ben Bernanke doesn't look like him, but he sure as hell is acting like Mr. Magoo. I mean, no signs of inflation. I mean, the guy is completely blind. I mean, even other central banks, I mentioned yesterday, around the world are hiking interest rates because they fear inflation, and they got much stronger currencies than we do. So if they've got strong currencies and they're worried about inflation, what should we be worried about with a weak currency, with the weakest currency in the world? When the currency is printed, when they debase your money, it makes prices go up. A strong currency keeps prices low. A weak currency means prices have to rise because they have to compensate for the weakness in the dollar. The less the dollar is worth, the more dollars you need to buy stuff. That is what's going to happen, and that is what is happening. And it's very important. And remember, before the financial crisis in 2008, people were staring at this in the face. They couldn't see the crisis coming. I was warning about it. Nobody listened. The crisis that we're about to enter into, maybe in 2011 or 2012, the collapse of the dollar, the collapse of the bond market, that crisis is going to exact a much bigger toll on the economy. It's going to be far worse than anything in 2008. It is right around the corner, and these idiots in Washington, these morons at the Federal Reserve, can't see it coming. Anyway, hold on. We will be back for your calls in a few more minutes, so stay tuned. You're listening to Peter Schiff, Gold Standard in Talk Radio.